Well, to take a look at the economic implications of these results, we're joined by France 24's business editor Bryan Quinn. Bryan, what then can we expect the key takeaways to be in terms of the European economy?
Well, Eve, we've heard plenty throughout this election about the limitations of the European Parliament's powers. One thing they do have a big say in, though, is approving trade deals. Anyone who's been following the news can't help but notice that it's a pretty sensitive moment for international trade, not just between the U.S. and China. The EU has a number of trade deals currently brewing. There's a deal with South American trade bloc Mercosur. Negotiations there reported to be nearly complete. There's the theoretical trade deal that will need to be worked out with the UK once it finally leaves the EU. Perhaps most importantly, there is the US. The EU's taken a lot of heat from Donald Trump over its trade relationship with America in recent months. Trump famously torpedoed the planned TTIP trade deal with Europe when he won the presidency. And since then, there have been a number of tentative steps to restart talks for a deal, but they won't be easy. The U.S. is seeking access to the EU market for its agricultural products, many of which don't meet EU standards. Think of chicken meat washed in chlorine, for one. Trump has already shown his willingness to institute tariffs on allies and rivals alike. The German automobile industry squarely in his sights there. That's making companies like Volkswagen and Daimler quite nervous. Here's Trump as he met with Jean-Claude Juncker earlier in the year.
We have many countries, we won't say European Union, we have many countries where they have massive barriers and they have massive tariffs, and we have to follow. And you could call it retaliation, but I'd rather just say that we want reciprocal. So whether it's with European Union or others, it has to be reciprocal in nature at a minimum.
Well, many of the parties that made big gains over these elections are in fact quite sceptical of free trade deals.
That's right. Italy's La Liga has railed against the CETA trade deal signed with Canada in particular. France's National Rally Party came out against free trade deals in general during the campaign. Even centrist parties like Emmanuel Macron's Republic on the Move are opposed to trade deals with countries that don't respect the Paris Climate Accords. As of 2020, that will include the United States since Trump withdrew from that accord. In fact, we're likely to see a sort of European flavor of protectionism in the new parliament with an ecological focus, especially considering those gains made by green parties. The EELV in France, in fact, has specifically called for a form of green protectionism with the installation of a new carbon tax on imports to the EU.
Okay, so a lot on the plates in regards to trade, but MEPs, of course, will first have to approve a budget.
Indeed, that's going to be pretty much top of the list as they take their seats in July. European budgets, of course, 7-year plans. This one will be 2021 to 2027. The basics have already been proposed by the outgoing Commission. It will now be up to the Parliament to propose and debate amendments, with the final vote likely late this fall. Plenty of important issues in the next budget, particularly for the bloc's farmers, as the budget is where the details of the common agricultural policy are worked out. French farmers are the biggest beneficiaries of the CAP, receiving around 9 billion euros in aid each year. The CAP as a whole is set for a possible 12% budget cut, though, so that could be quite significant for the agriculture industry, especially here in France.
Well, now that the elections are over, the horse trading over one of the most powerful financial positions in the Union will get underway.
That's right. Mario Draghi, current head of the European Central Bank, his term is up in October. Draghi, of course, has been the steward of Eurozone monetary policy throughout most of the sovereign debt crisis that nearly broke up the Eurozone currency bloc after the 2008 financial crisis. Draghi's policy being that he would save the euro at all costs, those costs eventually including pumping over 2.5 trillion euros of freshly printed money into the Eurozone economy through what's known as quantitative easing. QE ended in 2018. Draghi's been moving to wind down more of the Eurozone stimulus programs, some pushback from the markets in recent months. We'll see what his successor has in store. In fact, there's a Frenchman who is top of the list. We don't really know who it's going to be. It's very much a backroom thing, but we'll
You're keeping a close eye on it for us, Bryan, I can tell. Bryan Quinn there with the business angle. Thanks a lot for that.